Yeah.
Yuri Milner and DST are betting big on Twitter, but is Twitter a company that still needs to figure out how to make money? Is it really worth $8 billion? Joining us now from New York is Kerner, Vice President of Equity Research for Wedbush Securities. He's one of the only Wall Street analysts who covers private social media and e-commerce companies. So, Lou, first of all, what's your take on Twitter bringing in this much money this late in the game?
Well, I think it's actually really early in the game for Twitter. I think they're well on their way to being a global, ubiquitous communications platform. And they've already have over 300 million registered users. And while they're early in terms of monetizing that user base, if you talk to advertisers, they're really falling all over themselves to figure out ways to leverage that Twitter audience.
So what do you know about how it's going so far? How are the revenue-generating efforts actually working out?
Well, I think it's very young in terms of their monetization efforts. Their promoted tweets, they just started a new system to monetize in-stream tweets, and that's very early. Their promoted trends, which they're selling at over $100,000 per day, sell out almost every single day because they deliver a huge audience to advertisers who buy them.
Is it worth $8 billion?
You know, it's really hard when you have a company like Twitter that's this early in the monetization effort to get a firm hold on how much it's worth. But in terms of the opportunity to get in on a ubiquitous global communications platform, if you think that they can get to 1 billion users, then an $8 billion valuation might seem like a really good buy in a couple years.
Okay, let's talk a little bit about Yuri Milner. He's obviously become more and more active in the U.S. tech scene. He's got this house in Silicon Valley. I was lucky enough actually to visit it. How has he changed the game for investors here in Silicon Valley?
Well, what he's done is he's come in and he said, you know, these companies, that are building these global communications platforms, these global businesses like Facebook, like Twitter, like Groupon, we think that they're creating a lot more value than the current shareholders are value them at. So they're coming in, they're outbidding a lot of other people to get into these deals. And what we've seen so far with regards to Groupon, with regards to Facebook, is that while they've paid more than a lot of other people are willing to pay, they've paid less than they're worth, a lot less than they're worth today.
Is Yuri single-handedly driving up valuations, though? And how do other investors feel about that?
Undoubtedly, he's driving up valuations. And what we're seeing is that others like Andreessen Horowitz are coming and saying, look, we've seen what Yuri's done. And you know what? We think that he's right. We think there are these new companies that have opportunities to build multi-billion-dollar valuations. And if we have to pay up for them in terms of their valuation today relative to where they are in terms of their monetization efforts, we think on a portfolio approach that there's still a great opportunity to get a high return on our investments in a portfolio of these investments.
Though, of course, those higher valuations also benefit the VCs who are already invested in those companies. I want to talk to you a bit as well today about Google+. You had a big call today about Google+. How quickly is it growing, and how do you see it evolving?
Sure. Well, Google Plus is the fastest growing website in the history of the internet. They got to 25 million users in about a month. MySpace had gotten to that in 18 months, and that was faster than Facebook or Twitter got there. But they got there not because they came out with this amazing service, but because it's Google, and Google was able to push a lot of people to try their service. But what we learned on the call, and we had experts like Robert Scoble, a leading tech blogger, Mike Jones, the CEO of MySpace, was that they're actually bringing a lot of innovation to the table in social networking. Circles is a way for people to, instead of, as they do on Facebook, have to blast out everything to their entire friend base, they can put people into circles and only share their family photos with their families. So what we're seeing now from Google is really, for the first time in a number of years, there's really a true competitor to Facebook.
That said, Lou, 25 million, that's certainly a lot in a short time, but this is a completely different era. Back in the early days of MySpace and Facebook, social networking was new to almost everyone.
Well, I think you're right. Look, Facebook is over 750 million users, so 25 million does not mean that they're a threat to Facebook today. But again, this is Google. Google with over $30 billion of cash on their balance sheet. Google with a tremendous roster of incredibly talented engineers. So this is a company that now has arrived in terms of having a platform that they can begin to iterate and improve and leverage all of the other assets that Google can bring to bear to really bring competition to the social networking marketplace.
All right, Lou Kerner of Wedbush Securities, thank you so much for your insights on all of this.